Hi, this is Dr.S.VALLUVAN. In this video, we are going to discuss the operating activities topic 3. This slide depicts the operating activities is a part of day-to-day functioning of an entity. These are the real-time example. For a restaurant, sale of meals is an operating activity. For a consulting firm, is a service-oriented company. They're rendering service to their client. So sale of services is an operating activity for a consulting firm. For a manufacturing firm, anything manufactured and selling of inventories. In this example, we have given a sale of ovens by an oven manufacturing firm. It's an operating activity for that company. For a bank, taking deposit, lending money is a core activity of a bank. So it is an operating activity for a bank. Operating activities are all the things company does to bring its product and services to market on an ongoing basis. Non-operating activities are one-time event that may affect revenues, expenses or cash flow but fall outside of the company's routine core business. Operating activities are those cash flow activities that either generate revenue or record the money spent on producing a product or service. Operational business activities include inventory transactions, interest payment, tax payment, wages to employees, and payment for rent. Operating activities are the daily activities of a company involved in producing and selling its product, generating revenue, as well as general administrative and maintenance activities. The operating income shown on a company's financial statement is the operating profit remaining after deducting operating expenses from operating revenues. There is typically an operating activities section of a company's statement of cash flows that shows inflows and outflows of cash resulting from a company's key operating activities. In the event of ambiguity, operating activities can readily be identified by classification in financial statement. Many companies report operating income or income from operations as a specific line on the income statement. Operating income is calculated by subtracting the cost of sales (COGS) and research and development expenses, selling and marketing expenses, general and administrative expenses, and depreciation and amortization expenses. Operating income excludes interest income or expenses. For example, an apparel store's operating activities may include the following transactions: buying material from suppliers and paying for labor to produce clothing, paying to transport the materials to the factory and the clothes from factories to warehouses, arranging transport from warehouses to retail stores and mail order customers, paying employees to work in warehouses and retail stores, paying managers to oversee operations, paying taxes, paying rent on warehouse and retail facilities. Other less common operating activities include fine or cash settlement from lawsuits, refund, and money collected from insurance claims. So these are the activities are called as operating activities. The importance of operating activities is to know whether the business is operationally good or bad. This the company wanted to know. So that is the reason why the business organizations classify their activities such as operation activities and investment activities and financing activities. Whether the company is going on in a profitable way or not. What about the company's gross profit? What about the company's operating profit? What is the EBITDA of the firm? What about the EBIT of the firm? So all things that the companies wanted to know. So by analyzing the operating activity, the management can come to know that the company is operationally good. Thank you.